presentation contains current opinions of Moe Ansari, Chief Investment Officer of Compak Asset Management, a registered investment advisor, and are subject to change. Nothing in this presentation should be considered investment advice. We make no assurance that Moe's opinions or illustrations will accurately predict future prices or financial markets. In no event is past performance a guarantee of future performance. A detailed disclosure can be found at the end of the presentation. And now here's Mo.
Hello, everyone, and welcome to the YouTube update for July 15th, 2024. I'm Mo Ansari, President of Compak Asset Management, and thank you for joining me today. First of all, let me remind all of you to make sure you go to compak.com/media to get all of these updates absolutely free. You can get the YouTube update, you can get the podcast, which is a much more detailed explanation of what I talk about here on the YouTube update. Also, you'll get all notifications whenever I do webinars, seminars, which I will be doing a quarterly webinar later on in the next week or two, where you will get a much more detailed quarterly view, what I see, what happened in the last couple of months, what to expect for the rest of the year. I'll talk about all of those things. It's about a 45-minute presentation, which you can get absolutely free by going to compak.com/media. Again, if you need help with your portfolios, just drop us an email, invest@compak.com. So let's start with the numbers. Last week, market continues to go to new all-time highs. S&P was up 0.89% on the week. We saw the Russell up 6% for the week. I'm going to talk about that a little bit more when I take a look at the chart. Seems like we have a breakout. Why and what does that mean? I'll explain that on the small caps. NASDAQ was down 0.38%. So a big reversal from the small caps. We went from NASDAQ to small caps. It's diversification. That's what it means, and I'm going to explain that to you. Looking at the best sector, real estate was the best sector last week, up 4.4%. The worst sector was communication services, which is basically Google and Meta. Those are the two largest components of the communication services sector. So looking at real estate, why did it go up 4.4% last week? Well, the expectation is that interest rates are going to come down, folks. Yes, now everybody is talking about a September interest rate cut and another one maybe in December, an interest rate reduction by the Federal Reserve. At least two now are being penciled in, maybe three. As I said, since the beginning of this year, and now we're in July, first there was 6 interest rate cuts, then interest rate increases. That was the narrative. And I said we still get 2 to 3 interest rate cuts later on this year, which I think we will get. Now the market is coming to the realization to that. As interest rates come down, the real estate market obviously will do well. And that's why it was the biggest number last week. We got inflation, the CPI and the PPI. The CPI was lower than expected, cooler than expected, and that helped the expectations for interest rate reductions to go up, and that's what made real estate market to go up. Oil closed at 82.62. Looks like it's starting a new wave count to the upside. Interest rates sharply lower. The 10-year went from 4.28 to 4.18. Big reduction in rates. We saw the rates come down dramatically last week, again, as the expectation increases for a reduction in the interest rates. Weekly percentage of stocks outperforming the S&P index. This is the stocks that are doing better. You can see it is one of the lowest levels, which was in 1980 when we were in a recession, lower than that in about 45 years. So there's just very few stocks that are outperforming the index. It was the technology stocks that were doing that, but I think now people are looking at value. They're saying, wait a minute, if interest rates come down, small caps do well. They're much more dependent on interest rates rather than the bond market, because small caps go to banks and borrow money for whatever they're doing, and lower interest rates are good for small caps. That's why small caps were up 6% for the week. Looking at the numbers this week, we don't get a lot. We get retail sales tomorrow, and they're expected to be down 0.3%. That's the expectation. Then we get business inventory, not a lot of big data coming out this week. So the headline CPI last week was down 0.1% month over month. It's down to 3%. PPI was up 0.2 year over year, 2.6. That's what the Fed looks at more, this PCE. But still, the target is 2%. So we're still a little bit higher than that, but we are getting closer and closer to that 2% number. Looking at the technicals, market continues to move higher, making new all-time highs. Looks like the target right here is around 56.50 or so. We are today closed at 56.31, so we are right there as far as the targets go. We could go a little bit higher on that. Here's the weekly S&P chart, support around 5,300 now, the first support, then around 4,900 and below that. NASDAQ, looks like we're still in wave 3. Now on the dailies, looking like this was looking like a fifth wave. We could get a fourth wave pullback, and then we go up again. That's the way the NASDAQ is looking at. Long-term NASDAQ, somewhere around 19,400 becomes the target, but we're at 18.5. This today is where we close. So looking at all of these numbers, seems like there's very little that can push the market down unless we do not get the numbers that the earnings numbers that are coming out this week and next week. Will be in the middle of earnings season for the second quarter. The expectations are very high. So far, they've been so-so, the earnings that we have got. If earnings do not come out as expected, that could set up some pullback, the summer doldrums. But overall, with lower interest rates now expected later on this year, that could support the market in the long term. Interest rates are now below the 4.36, which is the 200-day moving average. We're right about here. And this is the range. As long as we don't get much below 4% on the downside and above 4.7 on the upside, we're in this window going back and forth, back and forth. As long as we don't go much higher, much lower, I think the market can live with all of this. Crude oil market looks like it's starting a wave count to the upside, could get as high, but there's technicals do not work as well on crude oil as it is much more of fundamentals and how much supply we're getting and so on. Small caps, I've talked about this area right here, 212 or so. We gapped above it after we got the, we gapped up on, after we got the CPI, then we gapped up again. Now if we've broken out to the upside, we might see some pullback because now we are at 217, 212 was the number that I was looking at. Seems like the market, which since March was just going back and forth, up and down, has finally broken out to the upside. And we could see some pullback, but I would view that as an opportunity to add some small caps to your portfolio. This is a weekly chart where each bar is 1 week going back about 2 or 3 years. You can see now the targets are somewhere around 245 for the small cap index. We were in this range, and finally we've broken out above it. And so now if we get some follow through to the upside, I think we could end up somewhere around here, which is around the 245 area, which was the high that we made last October. Gold seems like it's starting to break out. We're back to the high end of the range. We can get above this to a 2440, 2450, probably 2500 becomes the next target. That's the target that I'd put out sometime. We've been holding in this range right here. Markets seem to be trying to start breaking out as we start to get the expectation of lower interest rates. I'm going to talk about all of these things in a lot more detail on the podcast that I will be doing with Javed. So make sure you tune in to the podcast. If you subscribe to Compak.com/media, you will get the podcast notification on your phone. So make sure you go and subscribe to Compak.com/media. And if you want some help on your portfolio, just send us an email at invest@compak.com. Javed and I or somebody from our office will get right back to you. We'll develop a plan, develop a roadmap to show you how you get from where you are now to where you want to go financially. Those are my thoughts. Those are my observations for this week. I will be back with you next week. Until then, good trading.
This presentation contains the current views and opinions of Moise Ansari, Chief Investment Officer of Compak Asset Management, a registered investment advisor. The views expressed are current only as of the date of this presentation and are subject to change. Nothing in this presentation should be considered investment advice, and nothing is personalized to any investor's individual circumstances. Compak Asset Management offers investment advice only after entering into an investment advisory agreement and gathering client-specific information about goals, objectives, financial status, and risk tolerance. This presentation uses terminology associated with technical analysis and provides charts to illustrate some of the concepts discussed. Technical analysis is a security analysis method with the goal of forecasting the direction of prices of securities or market indices through the study of past market data, primarily price and volume. We make no assurance that past performance or the use of technical analysis will accurately predict future prices. Further, a risk of technical analysis is that overfocus on historical patterns could lead to ignoring or downplaying security-specific concerns, overall market or sector concerns, or other factors because we assume inaccurately that historical patterns will repeat themselves. In no event is past performance a guarantee of future performance.